In this video, I'm going to show you how to develop your pitch decks in a proper order, a sequence or a series of evolutions, if you will, that will help you go from start to finally getting to a pitch deck that is going to be meaningful for investors and help you raise money. And so many founders make the mistake of trying to get to the ultimate, the perfect pitch deck right from the beginning. And that's what I want to show you, because there is a way to make sure that you reduce the amount of work, the heartache, and all the steps that you have to take to eventually get to the point where you can raise whatever stage of funding that you're looking for. You're going to go from an idea validation pitch deck to a master pitch deck. Then there's going to be a screener introductory pitch deck, a presentation deck, and then a socialization deck. And finally, you'll be able to customize all the decks to whatever you need. And it's very important that you understand, be prepared to go through multiple iterations while you're getting feedback through this entire process. Before we continue, my name is Ed Kang. If we met before, welcome back to my channel. As always, use the chapter markers to skip ahead right to the good part of the video. If we haven't met before, welcome to my channel. I am a 7-time funded founder with 2 exits. And that's just a fancy way of saying I failed a bunch of times to your benefit, because I use YouTube videos like this and my channel to help founders of all stages, but especially early stage founders raising early stage capital, avoid some of the catastrophic mistakes that I've made. Not to say you're not going to make mistakes, but I'm going to try to make your life a little bit easier. It's hard enough as it is. I'm also the Chief Strategy Officer for startups.com. If you haven't heard of us, go over to the website, check it out. And always, I've got a special 14-day free trial where you can come and spend time with me as your advisor. All you have to do is leave a comment and let me know what you are building. Might have some questions, but you can come on in and we can spend 14 days together. If you're already part of startups.com, thank you so much for joining us. While everybody's here, do the YouTube thing, like, comment, subscribe. Your feedback is always helpful. Let's jump into pitch deck evolutions. You might be familiar with Pokemon. I personally don't play Pokemon, the cards, or the game, but I'm familiar with games where you can get a starting pet and then evolve it in different stages, and it gets to new levels and more effectiveness. That's what we're going to do with your pitch decks. You might have a B2B pitch deck or a B2C pitch deck or a CPG pitch deck. It really doesn't matter. We're going to evolve your pitch decks in the right order. But before we get there, let me give you some guiding principles. You want to be direct versus being perfect. So many founders get wrapped up in trying to make their pitch decks perfect or come across as perfect founders, and they miss out on being direct. The investor doesn't want to know everything that you've got thinking in your head, everything that you're going to do with your startup. They want you to be very direct so that they can make a proper decision right away on whether to continue to look at your pitch or set you aside and say thanks but no thanks. Because not every investor is for you, and your job is to get to that sorting decision sooner than later. Nothing's worse than dragging things along and being stuck in limbo and looking for a decision. Continuing in the same theme, it's about direction, not perfection. You can iterate your way there with your pitch deck just as long as you're pointed in the right direction. Perfection is the enemy of progress. In other words, perfect is the enemy of good. You want to be just good enough to get your message across, because most investors that understand how to professionally invest in startups accept the fact that you are going to be wrong in your first hypotheses out there, and they're expecting you to be the adaptive founder that will continue to learn and grow and make sure that you're figuring out the best thing to do with their money. Therefore, they don't need perfection right out of the gate. They just need to know you know how to pick the right direction and keep working your way in that direction. That means if you're not talking to people every step of this, you are doing something wrong. It's just like going out and doing demand discovery, customer discovery, idea validation in the beginning stages of your startup. If you're not talking to real people about their problems and you're just building everything, your products, in a vacuum, inside your own mind with all your cognitive biases, that echo chamber, you are going to create a solution looking for a problem. Instead, investors want to know that you are solving a problem, one that is profitable, that will make them money. And it's the same thing with pitch decks. You want to be getting feedback all the time, because investors are like your customers. They're not customers themselves, but you want to treat them like that and do research. You're asking them for a $500,000 check, $100,000 check. If I'm doing a high ticket sales like that, of course I'm going to research. I'm going to talk to my customers and find out what language they use, what they need, and investors are the same thing. So feedback every stage is going to be absolutely critical through this entire process. Finally, my last disclaimer, in my humble opinion. All this is based on my opinion alone. Founders often come to me and say, Ed, wait a second. I got different advice from this other expert, this other guru, this other successful founder, this other investor. And I say, great, follow them all. Figure out what works for you. I say this all the time. Half of my advice is amazing. It is spot on. I'm the perfect advisor. I'm the best in the world. I just don't know which half. That's for you to figure out, because you need to learn not to follow some ABC 1, 2, 3s, but follow the principles, understand why we think the way that we do, what has worked for us, and begin to adapt it to yourself. I can only share with you what I've experienced and what works with me. Nothing more, nothing less. I'm going to be open and transparent. It'll be up to you to approach it like a buffet and say, this works for me. I like doing this, and customize it till finally it becomes unique to you. And that's what all founders have to do. You have been warned. The first deck that you will create has to do with idea pitch validation. In other words, it's called your elevator pitch deck. I'm not going to go through how to do each one of these slides. I've got plenty of videos on my channel to do that. And if you stick till the end of the video, I'm going to put up a video that you need to watch next and a playlist that's going to help you out. This is simply going to be a summary. And this is what goes into the first deck is a cover slide with a simple description with no slogans or hype. The next slide is your problem slide. One sentence describing who has a problem and how many have that problem. That's the size. The scope is why that problem exists, and the severity, what is the cost of that problem if people do not go solve it. Next is a solution slide. It's going to be one sentence again, and you will see a theme where we're going to keep what's on these slides as brief as possible, and you'll see why. One sentence to reverse the scope of the problem. If your solution statement is that 10 million people a year waste $10 billion doing something that's slow, manual, and expensive, your solution is going to say, we built this app or whatever it is that makes things faster, it's automated, and costs 10% of what it normally would cost. It's as simple as that. It's not an instruction manual. It's not a deep dive. The investor just needs to know that they can go from problem to solution and the two link up. After that, it's going to be the market slide. And that's one sentence that says, this is my ICP and how many people there are. Most likely you've already mentioned it in the problem. And you're going to talk about why you're targeting a specific segment of that market, because you can't sell to everybody. You try that, you're going to sell to nobody. You can't boil the ocean. Investors want to know where you're going to focus while at the same time understanding the entire market potential. If this slide doesn't look like the typical market slide that you're used to, don't worry. Eventually, we're going to evolve this slide to get there. But right now, you want to make it simple because you're looking for validation on your idea or your pitch. Next is a how it works slide. This is a simple 3 to 5 steps that walks the investor through the problem to the solution. In other words, the customer's perspective on how they go from beginning state and to the end state where they have basically a fairy tale ending because you exist. Then it's a team slide. It's one headline explaining why you. Just put it right out there, and then you're going to add bullet points of your domain expertise, social proof, whatever is going to say, hey, we're the team that's going to win. Here's why. The ask slide comes next, and this is optional. This is a special technique that I use, and I like to say funding is not required at this time. This is a ninja move slide that I personally developed, and I told you, in my humble opinion, works from raising millions of dollars across hundreds of investors. I like to plant a seed of FOMO and make investors go, wait a second, they're not asking me for money, and we'll go to a principle of asking for advice so you get investment versus asking for investment, you always get advice. And I want the investor to think, wait a second, if they don't need my money now, they might not need my money later, and that is worrisome, and FOMO starts to sink in. Especially if it's a good idea with a juicy big market, then greed starts to sink in, and then you've got the double whammy. It's the 1-2 punch that you want in all your pitch decks. I presented this type of deck to potential investors, and by the end, they've said, Ed, I think you've forgotten something. Don't you want my money? And I've said, no, I'm not raising right now, and I might not even raise. And then I've got them hook, line, and sinker, and they've said to me, just want to let you know, Ed, if you would have asked for money, I would have written you a check. And I said, thank you very much. I'll keep that under advisement. What you're trying to do is reverse the power dynamic. You want to let them know that you potentially could need them less and less. In fact, you're not going to need them more than they need you. And that's the reversal perspective that you want them to experience, because typically investors say, you need me more than I need you. And finally, it's the back cover. And that's where you're just going to have a call to action and say, hey, let me know if you want continual updates on my progress. Now, you might be thinking, Ed, there's some missing slides here that I'm used to seeing, and I just want to make sure, do not skip ahead. As tempting as it is, you need to get get validation first, and I'll show you how to do it. Taking this deck, you are going to make a list of everybody you know. Go through your phone, go through your LinkedIn, your email contacts. And this list is going to be made of people who are connected to investors, who are potential customers, who are experts, advisors, or experienced founders in the industry, or other people who could potentially give you referrals. Do not leave anybody out. List them all. Get your team together and do the exact same thing. The more the merrier. Put all of them together on one sheet. Then you're going to create 3 columns. A, B, C, and D columns. The A's are your warm personal connections. They know you, you know them, you might know their kids, maybe you go to the same poker game together. Whatever it is, you've got more than a professional connection, it's a personal one. Your B's are the professional contacts, the ones who know of you and will pick up your call or receive your text message, respond to your direct message on social media. And C stands for cold calls. Set those aside. You want to create a column for them because eventually you'll get there, but you at least want to bucket them into that C category so you don't get confused or overwhelmed by your entire list. And as you might expect, you're going to contact your A's and ask them for feedback. It's going to go something like this. Hey, your opinion's very important to me. I'm potentially raising money. I'm just getting some idea validation, some feedback on my pitch. I'd love for you to take a look. Can I send it to you? The more personal they are, the warmer they are. They probably owe you some favors. They're probably happy to do it. And that's where you want to start. You want to begin warming things up because it's very difficult to come right out of the gate and go for your cold calls. Start with the warm leads, and that's going to give you the momentum. After they've looked at the pitch deck, you're going to talk to them and you're going to make statements such as, if you knew you couldn't offend me, what would you say? Just rip off the Band-Aid, put it right between the eyes. I'm a big kid, I can handle it. If you're too sensitive and insecure to get feedback from your friends, you are going to wilt under the pressure of cold called investors. That's if you even need to cold call investors. You might not if you're following my system properly, and you'll see how this works. After that, you'll ask, can I send you updates? Can I put you on an email list? Most likely they're going to say yes if they understand what's going on, or they've given you feedback and you're going to say, can I send you updates on how my pitch deck changes and how my startup starts to progress? Finally, this is another ninja question many founders forget to ask. You're going to say, who else should I be talking to? I really value your opinion, and you sort of butter them up. Give them a compliment. Thank you so much. Who else do you think I should talk to that would have the same value of opinion as you? Make it easy for them to refer. Brainstorm with them. Maybe drop some ideas of potential networks that they could consider. And when they do give you a name, ask them what is the best way to make that referral to contact them. Maybe they want to send a mutual email or ask permission first. Or they might say, I know them really well. Just contact them. Let them know I sent you. The point is, ask them because you want to make them look good for giving that referral. But if they don't want to refer you, that could potentially be a sign. And you can ask that question. How can I improve to the point where you do want to give me referrals? And they'll just explain to you because they are already in your A category. And as I told you, this is the best place to start. Now you're ready to move to deck 2, which is the master deck, and you're going to be adding slides that you think you need. This really cool chart was created by our friends at SlideBean. They basically took some of the major investment firms, the investors right across the top, and they went through all the potential slides that you might need. This is a bit of a checklist that you're going to add to your first deck. It might be an executive summary slide, a why now slide, underlying magic slide, or a competition slide, which is different than a competitive advantage slide. Go look it up. A go-to-market slide, or a board and advisor slide. You might have to flesh them out because they might be important. Traction and milestones could have its own slide. There are always room for testimonials. Fundraising, maybe you're explaining how you're going to approach fundraising, or you've got different issues on your cap table that you need to explain to them. Use of funds, that can be detailed. Or other slides that you can think of that you're going to know and discover along the way because you're getting continual feedback. During the first round of feedback, there might be a common question that keeps coming up, and you begin to think to yourself, wow, everybody's asking me about this. I'm going to dedicate one slide to it. This is how your pitch decks evolve to make sense for you, especially if you can preclude objections. Put slides in there that you're going to say, I know what you're thinking, this is impossible, or I know what you're thinking, you want to know how this works, here's the slide, and that's going to make the investor go, this founder knows what they're talking about. And as I said, if you're sitting there thinking, I don't know how to do these slides, what's the best format, can I follow a template? Don't worry, other videos are on my channel. I'm going to list them coming out by the end of this video. The next evolution, your third deck, is the screener introduction deck. this is the deck that you will use during your outreach. And it evolves from your first deck by adding multiple slides from your master deck. I've highlighted the ones that you're going to add, but you're going to start off with your basic cover. After that is your problem slide, your solution slide, and then you're going to get to the market slide, which will evolve a little bit. You'll have the same summary sentence, but you may want to add Tam Sam Som. Look up how to do Tam Sam Som from a bottom-up perspective. It's optional. Sometimes you need it, sometimes you don't. I like to have founders do it because it makes them understand how to analyze the market properly so that they have the framework that I can work with them on really, truly analyzing their market opportunity, because as an investor, I'm probably going to have to make those calculations. The how it works slide stays the same, and then it's the business model slide that you've added, which explains in one sentence how you plan to make money. You're going to say, we charge subscriptions and transaction percentages. That's one example. Whatever it is, make it simple and make sure that your assumptions of what you're going to charge, that pricing is battle tested. You're either studying what else is in the market, or you've actually talked to customers and that's preferred. And you can tell the investor, I talked to 100 customers and they agree this pricing is what they would pay in the beginning. Another new slide is the go-to-market strategy. And this is where you explain these are the channels that we are going to be using. Hopefully they're battle tested channels. After that, you'll have the other channels that you will begin to explore. But like I said, hopefully you're starting off with a channel that has been working, that has helped get people on your waiting list or put their initial deposit down or develop your social media. The next new slide is the competitive analysis slide. You will analyze direct and indirect competition, not just the startups or the other companies such as the incumbents that are already doing what you do, but what is the indirect competition? What do users do when they don't know there's a solution, or how have they been trying to solve the problem before and they're defaulting to that behavior? That is competition, because you need to get them to change to start using what solution you're putting out there. The team slide is the same thing. Put all the bullets there for your domain expertise, social proof, and your advisors. And then next is the traction slide. Every good traction slide has the state of the product, the customer validation, and the month-over-month or the week-over-week metrics. It could be simple as, we just launched our beta, it's out there, and we now have 1,000 customers, and we've been growing 10% week over week. Then you'll add the ask slide, simple format. We're raising X amount of dollars for Y milestone in Z timeframe with a use of funds. An example could be, we're raising $1 million to launch new features and get our first paying customer within 12 months. A pro tip, add how much revenue or how much value that could represent. You could say representing an additional $2 million of revenue. Finally, you might change the back cover to have a vision statement. That's optional. There'll be contact information, but a call to action. Invite them to a demo. Invite them to reach out and schedule a meeting with you. Give them something else to do. Plant that seed in their minds. Too many founders just say thank you at the end of it, and it's completely useless. Why have that slide there? Don't waste the opportunity. Remember, this is your third deck evolution. You are going to cut your master deck down by 90% to go and get feedback. There's another round of feedback after this. The whole screener introductory deck is designed to be clear and concise and not clever. The more information you put in there, your stories, jokes, whatever comedy that you want to do, something that you think is cute, it is not going to help. The more you put that in there, the greater the chance of you creating more friction and having the investor either doubt you, question you, or give them ammunition to fire something back at you, which is going to create a sticky situation. And you don't want that to happen while you're trying to get them to contact you to go through a deeper discussion about your pitch. Help them get to a sorting decision in 3 minutes. So important here. Investors are not going to spend 30 minutes on your pitch deck trying to interpret it, pontificating on how amazing of a unicorn founder you are. You know those platforms and how you can track how much time investors spend looking at your pitch deck? I had a founder tell me the other day, I saw an investor spend 11 seconds. That's it. That's not far off. Typically, I'll spend 90 seconds, and here's how I do it. And I've learned this by being the general partner or an angel investor, an analyst or a scout, working with other investors, having committee, having to allocate over $100 million in a fund. I would see dozens of pitch decks a week, and I got really good at pattern matching, recognition, and I had a certain bias to it. So I'd spend 30 seconds looking at your cover, problem, solution, and market slide. 4 slides, that's it. And if those 4 made sense, I'd probably review them for another 30 seconds and then go through the rest of the pitch deck for another 30 seconds for a total of 90 seconds. Then I would make a sorting decision and put you on a maybe pile or a no pile. You have to understand, investors aren't trying to be mean. They're being efficient with their time because they understand what a good pitch deck looks like pretty much right from the cover. You want to optimize your chances, and that's why why when founders send their pitch decks to me, I will first ask, what is the purpose of this deck? What is the audience? Because typically they'll send me a master slide deck. 9 out of 10 times they tell me it's for outreach, and I say, we need to cut this down into a 3-minute experience, tops, ideally 90 seconds. Ideally, every slide can be scannable in less than 30 seconds. They may pass it along, have other people look at it, make it efficient. Once you've done that and you know you've reached these certain milestones, it's optimized, you're going to test again with your A list. You'll go back and say, hey, I put the feedback into practice. What do you think? And after you get validation there, you're going to start with your Bs. Reach out to them. These are your professional contacts. And now you're ready to do so because you've handled all the previous feedback really well. You're stronger for it and more confident, and that's going to come across, especially with that B list. And most importantly, work on traction at the exact same time. We are living in a totally different startup funding environment than what it was like way back when I first started raising money. The frothy times of 2021 are over, and investors now want to fund traction, not ideas and speculation. They're not giving you money to figure things out. They want to put their money and pour gasoline onto an already lit flame and turn it into a fire. Now, how big that flame needs to be is going to be different from investor to investor. And that's why as you're getting this feedback on your deck, you're going to be working on traction at the same time. So you've got better and better milestones to communicate with those investors. Because remember, you're keeping them all posted. You already told your A list, and now with your Bs, can I keep you updated on my progress? So many investors will watch a founder for 6 months. They'll track the founder and they'll give you a test. They'll say, are you going to send me investor updates? And a lot of founders don't do that. Think of the investor that says, I like the idea, I like the team, I like everything that we've got here. You're just a little too early. I want to see more traction. What are you going to do? Go and talk to another investor that doesn't need traction? You've already got someone on the line. Work on the traction at the same time. Do both, and eventually you'll be able to communicate enough traction and milestones to de-risk the investment proposition enough for that investor to want to come on board. One time, I had investors look at my pitch deck and said, Ed, this is the worst time to start a business. It was right when COVID lockdowns were happening. And I said, great, hold my beer, watch me. And we went and we pivoted our product to work in a virtual environment because of the COVID lockdowns. I went out and crowdfunded. I pre-sold, rewards-based crowdfunding, $45,000 worth of product. Then I went back and said, how do you like me now? And then I raised another $200,000 from those investors. If you've done this right up until this moment, they are emotionally involved and they're watching you. And the more you can show them, I'm the founder with the goods, I'm developing momentum, there's velocity, I'm relentlessly resourceful, pessimistically persistent, and going out there and proving to everyone that they can trust you with their money, it's going to be so much easier to raise funding. And that's why I've got this series of evolutions that I'm trying to teach you. Your fourth deck evolution will be the presentation. This is what you'll be presenting live. After they contacted you, you need some type of presentation material. So before the meeting, here's what you do. You will contact them and ask them, what are you expecting from that meeting? How can I best prepare? Then you will have your master deck ready. You're not going to show them the master deck. It's going to be overwhelming. Just have it ready on the side. You will adjust your screen or deck, and that's going to be a maximum 6 to 10 words per slide because you don't want them reading the deck. You want them listening to you. Your deck will be a visual complement to your presentation. Cut out all sentences and just keep the bullets and the main data points. For example, if you've got 10 million people that do this, this, and this, just put 10 million and explain it verbally. And with a live presentation, you have opportunities to add a lot of storytelling. Not so much so you bore the audience, but to the point where you can get your point across in a more dramatic fashion. Maybe include a picture of you suffering from the problem, or you with a bunch of users, or a bunch of users showing how happy they are because you've done an amazing beta test for them. Use visual elements to your advantage. Share it in pictures. A picture is worth 1,000 words, remember. Think of it like a trailer for a movie. Have your demo ready. They might have already requested this from you, but be prepared to demo it and always practice. I like to record my presentations and then I listen to them without the video on, and I can listen to myself, and then I take the transcript and I read the transcript, and boy, is it ever revealing. I do this with my YouTube videos, and man, it's cringy, and I try and improve every single time. That's all you can do. It's the same thing with pitching investors. Now, during the meeting, you're going to do a few key things. You're going to present for 20% of the time, then you're going to try to create some conversation 80% of the time. It's the 80-20 rule. If you've got it flipped and you're presenting 80% of the time, you're going to lose them. You'll know your presentation is going well if they're filling up that 80% of the space and they're having a conversation with you. Ask them questions, and when you answer their questions, be ready with your master deck slides. You want to be able to say, oh, great question. I just happen to have a slide for that. Let me show you. And that's going to demonstrate the type of founder that you are. At the end, you will ask, how do deals get done? You may say, I have a question to conclude this. How do deals get done at your fund? Or how do you make decisions on which deals to invest in? If they're engaged and you've done it right, they will tell you, and that's when you can co-create a next steps, an agenda on how to follow up with timestamps, with actual dates to follow up. For example, they might tell you, we meet every Monday and we share all the great pitch decks that we've seen through the week. And then you'll say, great, can I follow up with you by Tuesday? Or they might say, we need to go talk to our other committee. We're going to share what we've learned here. Thank you so much. Then you can ask them, can I follow up and send you some more materials, what do you need, and when will you get back to me? And you're going to hold their feet to the fire. Investors don't mind. They want to be polite, especially if it's a no, but they don't mind telling you, and that gives them an opportunity to offboard you politely or actually commit to something, which is what you need, and that gets you out of that investment purgatory. Just be prepared to accept a no. If they give you any other answer other than concrete steps, what they're going to do next, just take it as a no and move on. Like I told you, we want to get through the sorting decisions as fast as possible because you probably have many other investors that you want to present to. Don't get caught up chasing them down. It's a waste of time. The fifth evolution is a phase called socialization. That's when investors may request additional decks from you. They want to socialize your opportunity, talk amongst themselves, or do some deeper study so they can make a decision. They might request an extended pitch deck, something comparable to your master pitch deck. Ask them what they want. It could be a product or technology deck, a market competition deck, a business model deck, fleshing out more in terms of how you're going to go to market and make money. A financial model deck could be lots of your finances, unit economics, a team hiring plan. If that's important to them, they need to know that you can scale with the people, especially if you're building AI. They want to know. Then there's fundraising. Maybe you've got some cap table details that need to be explained. Growth, traction details. They're going to break everything down, so they need to do some projections or an impact risk analysis. Whatever they need to understand to de-risk it, to fulfill their investment thesis, they're going to ask you, and you want to be ready to give them a presentation on it. Now, by this time, many founders ask me, why don't I just send my business plan? First, investors don't look at business plans. They change all the time. If anything, if a founder sends me a business plan, I plug it into AI, and then I ask the AI to read it for me and present it back to me. You want to make it as easy as possible for them. So instead of reading a document, put together a presentation so they can see the story unfold, and they can also share the story with others. Remember, this stage is about socialization. So be on your pitch deck game. Know how to do presentations and package everything up in your master deck in a way that makes it palatable to them, easy as possible for them to glean from, and that's going to remove the friction that could be happening because that pressure is going to mount as they start to do due diligence on your company. And that brings us to the final evolution. These are your custom pitch decks based on the context. It might be audience. You might be presenting live, or you might be presenting to friends, family, and associate investors. They may have different types of requirements, or it might be intimidated if you got something that you normally present to VCs. I've had different decks for different presenters. If different co-founders are present or they're doing it themselves, they want to tell their own stories, I've had completely different decks for them. Referrals. Maybe that individual says, send me this information so I can pass it along to other potential investors. That's going to be a different deck. Or you'll have to present data. They might want to do a deep dive into all the science and everything that you understood. Inflection points, different milestones. What happened when you hit this inflection point where suddenly you started growing 10% week over week? Your deck might accompany a sales demo, not just for potential customers, but investors might put you in front of their potential customers, and they want to see how you do with them. Don't forget public-facing decks. Maybe you're doing a Reg CF, or you've listed your pitch deck somewhere out there for Reg D. You don't want to get in trouble with the SEC for putting information publicly out there that should be private and confidential. That's a different deck. And finally, you've got your C decks, A+ rounds, B, C, D, E. Doesn't matter. Your deck is going to evolve and change depending on the round. Now, I fully acknowledge, as I always do, you might feel like you're drinking water out of a fire hose. I'm going to repeat it again and again. I'm going to cram as much information and give you as much value in these videos. That's why you're going to take it step by step. Go through the description where I'm going to break everything down for you. Once again, like an instruction manual, watch this video as many times as you need to. Most importantly, I'm here to support you. Ask as many questions as you need to. We're going to do this together. In the meantime, watch this next video and this playlist. This next video is going to break down all the slides for your first pitch deck, slide by slide. And the playlist is all the pitch deck basics, all the videos on my channel that you can watch in a particular order, and that playlist will guide you on the next steps of your journey. I want to hear how you're doing. Keep me updated. Thank you so much for hanging out with me in this video. I'll see you in the next one.